TGIF, everyone. Be there or be square.
Or be sacked.
Huh?
Or
Be
be
there.
sacked.
Everyone sign up right now. 1, 2, 3, go. All right.
And by the way, Ryan, I don't think Dale quite got that joke.
No, don't say it, mate. Don't say it. I've warned you.
Ryan's having, Dale, let's just put it this way. Ryan is having a great time in the UK right now, and he can't wait to talk about it. So.
Okay. All right. Well,
I warned you.
here we go. I mean, what a day we had yesterday, huh?
Yeah, massive day yesterday.
So.
Fun and games, eh?
Yeah. What do you think? One day wonder?
Yeah, it looks that way. There was lots of stuff in the mix, wasn't there? The volatility is what caught everyone out. You get a 2-3% move south in stocks, and then it goes the other way, up 2-3%. Bonkers. You can't legislate for that sometimes.
Yeah. Glaring divergence down here, 2 drives. Anyway, that's all I see. And then I thought we'd have some follow through in the dollar, but nope, that was looks like that was another one-day wonder too. And I didn't like the way the metals were reacting when the dollar got weak. The metals just barely recovered. Maybe silver's going to 1650. Just going to wash everyone out one more time. And gold, maybe the same thing. So they're not acting good, and they're not going to turn till this does.
Yeah.
So, so we had this big IMF or World Bank meeting, and they're just benign neglect. I haven't heard even a communique about what happened in the UK or anywhere else. I think their only statement was about climate change.
Well, there was an FX comments that they're basically reaffirming their prior commitment. So really nothing new.
They don't. What's their commitment? They don't have one.
Well, their commitment, and I wrote this post yesterday because there were 2 lines in it that you could absolutely guess who wrote them, which was said they're going to continue to monitor excess volatility and volatile moves are undesirable. Who wrote that? The Japanese, obviously.
Okay.
But yeah, that's their prior commitment. So nothing new on that front. So we're not yet at coordinated intervention, DEFCON 2 or anything like that.
Nothing. And, I mean, the BOJ must feel a little silly, don't you think? I mean, with this, attempt here, and now we're here.
Well, it's
so
it's the volatility. Okay, we had a volatile time yesterday over CPI, and we did get I think it was during when I was on with Blake on the Morning Edge, we got a big dump, 100 pips just out the blue in dollar yen, and everyone started going, "Oh, they're intervening." But it's the volatility, and we've been saying it for long enough. This can go to 160, 180. It doesn't matter. It's how it gets there that matters. And at the moment, we're just grinding higher. Kuroda's been out saying,
I totally disagree.
I don't see this being any more volatile than
I totally disagree, by the way.
This. Okay.
The reason they don't like volatility is because they don't want this move to bring USD yen too high. It's not just about going too high in an orderly manner. Right. Speed obviously plays a role because clearly if things get out of hand in the way it moves, then it can become a circle of evil, right? A vicious circle in essence. So I do agree that volatility matters, but I totally disagree that volatility is the only thing that matters.
Yeah, I think levels matter.
Yes.
No, cool. Yeah, you're quite right. And businesses complain because obviously you got the import-export effect in that. So, yeah, but then, as I said, Kuroda's come out. He came out the other day and said that yen weakness is actually does some good for parts of the economy. So, they're not ready to pick levels in this.
Well, then why did they do this? Because the pattern doesn't look any different than it did prior. I mean,
it's a 600 pip candle.
Yeah.
Well, okay. And then you look at the few months prior to that, Dale. I mean, that was a pretty accelerated move, you know.
Yeah, it's true. Yeah.
You know, the real move here is probably from you know, the 130s up. That was the kicker.
This one,
you know, because we hit that high, we found some, like, you know, it's like
140,
blue all the way, blue weeklies all the way, and big candles as well. You know, that's what got them turning and you know, getting the language stronger.
This weekly candle is already turning to be one of those type of candles.
Yeah, you're quite correct, Steve. You know, I don't disagree with that at all. But again, you know, it's how it's doing it intraday. You know, we've gone what, 100 pips in 2 sessions over with CPI in amongst that.
Yeah, it's not and it's not like, so it's even disconnecting from yields because because yields are coming off.
Yields stopped going higher, and we broke out in Asian trade the other day, and that was 200 pips ago. That was what, Wednesday night?
Yeah.
That's great, you know.
So when you look at that,
that's getting kind of unruly though.
Yeah. So then you look at that, and maybe you think, okay, well, perhaps then they are maybe getting towards or we start to get the speculative language coming in. And that's, you know, they've got stages. You know, we highlighted this all through this. They have stages of rhetoric. If they start coming out with speculative comments, then we're close to intervention again. And so far they haven't, apart from Kishida mentioning it in I don't know what the context was this morning. All the others, Suzuki, all those, we're still at urgently monitoring and all that sort of stuff, but we haven't got the speculative.
I think once again they're displaying a very reckless approach, because even if they manage to slow down the pace, as long as their monetary policies remain exactly the same while the fundamental environment is totally shifting and has totally shifted, Japan, for the first time after who knows how long, now has an inflation that's getting to the point of not being acceptable by standards we had until like 6 months ago, right? And they keep on you know, following the same monetary policy. So in my opinion, even if they manage to slow down the process, it's a matter of just a few more weeks or a couple more months before the level gets to a critical point. And then what?
So
then they'll start talking about it.
Yeah, but if you know you're getting to that, why not do it earlier before you have to do it at a point that the FX rate is a huge issue? That's what I mean.
Yeah.
Well, it's the old how long's a piece of string? Why didn't they do it 2,000 pips ago?
Right, exactly. Well, yeah, exactly.
An ounce of prevention
you could have made that argument for months.
Yeah.
And I, you know, I don't,
Benign
you know,
neglect.
I'm going to be the first one to say, you know, being around, you guys see this as a pretty good move. It was equally, if not more epic right here back in 2011 to 2013.
Where would that have a quality?
What's that?
Where would that have a quality? That move from, say, 100, the move you had in 2011.
You know, we'll see, actually, because when this move started after Abe made that announcement, let me get that. Let me undo that.
That's how you get 160 or something if you have a quality.
I mean, it's basically the same. You know, we're about there, maybe to 150.
Yeah.
So and that would be the top of the wedge. And this is the one thing that, you know, we have to start looking
at. What a wedge.
I was telling Ryan this when we were on together on the morning edge yesterday. I happen to be short because when we hit the 127% extension on the dollar yen, you know, I mentioned everybody, look, I'm gonna sell it, and I sold it. I was up like within seconds, a quick 86 pips, and then I covered it, and we were live on air, and I was like, man, that was fast. I'm like, that must have been, you know, intervention, or Ryan thought they might be checking rates. But look, we're getting to a point, and I was telling him, you know, yesterday, you know, my wife came down from our room, and she goes, did you know the yen is at 22-year lows? I'm like, no, I had no idea. I'm joking. I like.
Thanks,
I'm
honey.
like, I lived the market. Like, yeah, of course I know that, but she's getting note of that, and she's reading that on Yahoo Finance or where the hell she saw it. But the thing is above where we're currently at, we might have actually just reached for it this morning. We might be at 30-year lows, and those are headlines that get people's attention, not just yours and mine and people that are in the know, but everybody's attention, the world's attention.
You look at that chart and you highlight the move off the 70s. Okay, I was long and sitting on a trade for best part of 2 years long from 2020 down at the 103s, 106s. I thought I did well getting 125s, and look what it's done after that. It's done in a few months what I waited 2 years for. These moves are just. I
hate when that happens.
You say about generational. These are generational moves.
They really are, and I would assume, looking at just the technicals here, we've talked a lot about it. We're getting close to the wedge top. I'm willing to take another stab at it, not necessarily today because it's a Friday, but we get to like 149, 149.50. I'll sell some, and then I'll give it a 200-300 pip stop, and I'll because if we come out of a wedge, this becomes accelerated right here. That's where things accelerate. So you don't want to let it get too far outside of that wedge. But it's a good risk reward because this is my favorite setup for a reversal.
Unless we have a throw over.
We would have a throw over, but you got to give it a little bit of room, but you can't. On this move, I remember watching traders, some in our community, would sit in a 600-700 pip move against them, and it's painful to watch. I'm like, dude, why aren't you getting out? Like and you can't tell people what to do. I mean, in our community, in the ForexAnalytix community, we're like, it's hard to, when somebody's in a trade and it's going against them, it's hard to, get on them too bad because they're already going through enough as it is. But, all you can do is point out like, hey, we're in a really strong uptrend. So, manage your risk, blah, blah, blah. And you just watch people and then they just keep adding and adding because they think it can't continue. Well, it can. And it's obviously proven itself. So when you get into a trade, whenever you're trading counter trend, everybody should always understand this, especially ones that are especially now when you're seeing such established trends. When you trade counter trend, and I was actually just talking to Mark Chandler about this, and he goes, yeah, us as traders, he's like, I look at it kind of like this, like I might stick my hand out, and he's like, I don't mind losing a knuckle. He goes, I just don't want to lose my whole hand. He's like, I don't mind losing a knuckle or two. And, if I'm going to try to, take a stand and get in the way. And I'm like, that's exactly right. When I take a trade, it's like, and I'm going counter trend, I'll take a position and I know exactly what my risk is and I'm willing to take it. If I'm not, if I couldn't buy a pullback and I want to play a trend like this, but can't let it get away from you, because if it gets away from you, you're going to start losing not only your hand, but you might lose your entire arm and maybe some other, body parts too.
That's entirely the thing, Blake. He would know that he's only risking a knuckle in the first place. So the worst he's going to lose is a knuckle. It's when people don't set their risk. I'm, as I've been saying, I'm shorting this. I'm spreading it out. I'm short. My lowest entry is 144.74. 150 is my line. If we get there and break that, then I'm going to reassess the trade. But I'm not risking even close to 1% on this trade.
Yeah. Well,
but I know if 150 goes, that's where I reassess.
Speaking of 1%, and Dale, this is going back to like your earlier conversation when you're saying your good mornings, and Ryan said sacked. He even said this to me in the chat room. Dale, Dale, we don't see you in the chat room as much as we'd love to, but we do a lot of joking around there. But Ryan said, don't ask me about the UK economy because I'm gonna leave and get off the phone and go grab a beer. So Ryan, how's the UK economy going, and what's happening with trust this morning?
There you go. I got it. Yeah. He's gone.
And he just left. He just left.
I told you. Don't ask me.
So what is happening there? I mean, I jokes aside, I mean, again, I spoke to Mark Chandler yesterday, and he actually described it as the Keystone Cops, which is between the Bank of England and
he's usually very
Truss's
kind.
Government. What's that?
And Mark's usually very kind.
Oh
So
my
for him
God,
to
he's
say that,
he's the best. I mean, him and I we talked for a good 45 minutes after we talked. So he's such a great guy. But Ryan, what's happening there? What's going on?
Well, this is all the political mess going on. The Chancellor's just resigned. They've been saying he was going to be sacked. He took that early flight back from Washington and the IMF stuff, pretty much turned up at the door, and he's out the door again. So the market's trying to work through what that all means. It started seeing it as positive. That was part of the rally we saw yesterday, and that we have been seeing that perhaps there's going to be all these U-turns in policies and this and that and the other. But really, the political mess over here is just unbelievable. It's a shambles.
It really is, and it's hard. It's hard to read. Not only is it hard to read from like an outsider point of view looking in. Like I try to make sense of it all, and it's tough as an American, especially getting up in the morning. I'm like, oh my God, what did I miss overnight? But then technically, you look at again. I'm gonna look here, and I'm just gonna remove the last couple hours of this disaster you guys have going on over there. I mean, that was like a perfect bear flag pattern with the euro sterling. I'm like, oh, good. Look, we might get a move back down to into the mid 80s, and then things reverse. That you look at the pound dollar, and you're like, oh yeah, nice bull flag pattern. Everybody's got stuck on the short side here, and it's not saying that we can't continue to be bullish. Actually, I think we're just consolidating before the next run, to be honest. Like I look at it, and that's the way I'm viewing it, and trading it, by the way. But it's hard to really make sense of the whole situation. So what do you think moving forward? What do you think is going to happen? Because Liz Truss, she's sacking everybody else, but is she going to get sacked? Like when does
it's too early, I think.
That's where it's heading. There's rumors already that she's going to be replaced. They're going to change the rules to be able to replace her. Will she get a new chancellor in? There's names being put forward, but if those people start turning her down, the writing's on the wall for her. It is a mess. But going back to your charts, this is where you've got to be careful with the text, because the bull flags and bear flags you've got on there have come about because of crazy moves. They're not come about because of real fundamental moves.
Yeah.
So you don't trust them as much as you would. Wait.
Fundamentally, the Eurozone is way better off than the UK. That's all I'm have to say. I'm just kidding. I'm joking about that. Anyway, I'm literally pissing off people as we go along. Go ahead. Sorry.
Yeah, you've just got to take that into account. When you tech these things, that the moves that you're teching them on, are they actual proper fundamental moves, or is it part of the craziness?
Yeah.
But yeah, if she gets set, I mean, I said this right from the beginning. Sunak would have been the most market friendly. I just underestimated how market unfriendly Truss would be. And if he gets the job, then maybe we start to see some stability. I certainly think the pound rises if she goes and Sunak comes in. But then
wait, what didn't Sunak have like a lot of skeletons in his closet? Like, didn't he?
Yeah, but which politician
doesn't?
Okay.
He was the MP's choice for leader. Remember, the people who actually chose Truss were the Conservative members. So, members of the public who are members of the party, not MPs, and they all wanted Sunak. So if Sunak comes in, I think we get a knee-jerk move higher. But I think that's such a quick change in PM will result in the Labour Party and opposition parties pushing for a vote of no confidence, which would mean a general election, and that is very negative, because, as we know, the Conservatives are polling very badly.
So Simon, who's also in our community, said, Blake, the name tip for a replacement is Hunt. Talk about punter. This typo opportunity. Jeremy Hunt.
That's going to be fun. You can Google that one, folks. Google Jeremy Hunt TV appearances, and you'll get the meaning.
Oh God. All right. I'll have to definitely do that a little bit later. So, hey, Dale, yesterday I'm going to go recirculate or circle back to yesterday. You called the bond market, the bond market when it, spiked down post CPI, you reversed and you called it. It's like, I'm going to be buying bonds when it dips. I hope you did really well yesterday. That was an awesome call. I had a really great day of trading yesterday. Unfortunately, I should have just, taken everything off the table. When you get up in the morning and you're like, shoot, some of my open positions that I did keep on, have pulled back. But I have to point out
perfection at the crap table.
What's that?
You can't expect perfection at the crap table.
There you go. That great point. I'm just gonna stop with the dollar Canadian right here, and I'm gonna do this really quick. And a gentleman, I know he's not listening right now because he's actually taking care of his mother because he had to take her to the hospital yesterday. A gentleman I met in my gym. He's he actually the first and only person that's actually come up to me and said, hey, you read ForexAnalytix on my shirt, and next thing you know, we're talking, and he's in our community. He's actually in the ForexAnalytix community now. We were talking yesterday, and he's been trading for years, and he's a younger guy, but he's been trading for years, and we were just talking about like some of these big developments that we saw yesterday, and I was talking to him after, I just happened to see him in the gym on my way out. And these are the types of, I was just explaining to him, like, these are the types of setups I wait for. I look for bearish outside days or bullish outside days in the market, especially in the FX market, because they're hard to find. So now you start looking for follow through if you can get breaks of like resistance levels. So these are like setups where I look at the euro and go, that is a great bullish outside day. Yeah. I know price action right now is pretty bearish, but we have a lot of time left in today. And don't forget, we have retail sales, which is, we want to see how the consumer's dealing with all of these inflationary pressures, which, by the way, are very high, as we saw yesterday. So any weak retail sales numbers is actually going to feed into dollar weakness, and it could be bullish for stocks. Then you have inflation expectations and consumer sentiment from University of Michigan at 10 a.m. Eastern. So there's a lot of potential for moves today, especially when you have pullbacks like we've seen. And I don't know if the euro is the right selection here. Like, you want to be buying the euro on the dip. I think the euro is a good opportunity, but there's definitely a lot of trades that still look really strong. Like, you look at the dollar mex, and we are just consolidating
again.
Yeah, it's just holding, and it we got a spike up to 20, not even to the 38% retracement, but spikes above 2010 are just getting smacked right back down. All the dollar Mexican peso needs is a move above 3,700. Next thing you know, we're trading, we'll probably be trading below all this support. You take the US dollar, Norwegian krona, big rejections, we're making lower highs. There are a lot, even like the Aussie dollar, this could be setting up as an inverted head and shoulder pattern. Like, these are those type of patterns that set up quite nicely for bigger reversals, longer term. And I look for patterns like this after a prolonged, like in this case, a prolonged downtrend could set up for a real, especially if this is ahead, for a really big long-term reversal. So again, a lot of data coming out today. Don't give up. If you're sitting there going, oh, well, it's Friday and, there's nothing going on. Look, I think there's a lot of great setups out there today. So this is not the day that you want to be stepping away from computer. So with all that being said, I know Stelios, he might be out. I think
No, I'm here.
Oh, I thought you were Mr. Sniffly. I thought you were just
I'm
like,
here,
oh,
I'm here.
my sniffles hurt. I'm not going to be
I'm just
here
listening
today.
to you guys talk, and I'm learning every single
My
day from you.
sniffles
So, Estelle, we haven't heard from you this morning, and we only have a few minutes. So before retail sales, which we are going to be covering live here before Rohit comes in. So, Stelios, what are you looking at today?
Good question. I'm a bit baffled by yesterday's price action. It was a very, very big reversal from the lows. I still, my view is still the same. I think risk rally should be sold. The question is where. And we were talking about this on the flow show this morning, and I mean, on the S&P, for example, I've said before, I think 3,900 is a really good level. I know it's not too close at the moment. I said I think 3680 to 3,700. So we're getting close there, which is a nice level, which is the previous. Let me pull up the chart. Hold on.
By the way, I think that reversal yesterday was purely because everybody is all positioning, and that's all it was.
I think
everybody's
so too.
like, I'm bearish. I'm going to be bearish because stocks only go down, and economy is bearish, and inflation is going to be high. So I'm just going to be bearish.
I don't know where this is going to reverse, but I can tell you when it is going to reverse.
Hold on.
When?
Just let Stelios finish. He was just
I was just I'm just giving a couple of levels. So 3,700 ish I think is a nice level, but it's not as big as 39, which I've been looking for a while. Remember, Blake, we talked about that a while ago. Obviously we're lower than we were then, but short squeezes like this you will get. And especially in bear market rallies, you know how they can be vicious and very fast. And this, I think, had the hallmark of one of those. So my bias is the same. I still want to be selling rallies. The question is where.
I would love to see 3,900.
3,900 would be amazing, because that means that a lot of people are going to get sucked into it. Say, oh yeah, this was it. This was a dip. We're missing now. It's FOMO. So
you got everybody that got John G'd on the bottom, and they got chasing the market down the short side. Then they're going to come back up here, and they're going to chase the market to the upside, and then they're going to get reversed. And I think you look for areas like this to be sellers. So I agree with you. Couldn't agree more.
Good.
Couldn't agree more with that. Well, I'm glad your nose is not so stiffly. So, Steve, please tell us exactly when the market's going to reverse.
When is Powell speaking next?
Oh, who knows? 2nd
of November, if I'm not mistaken. So that's when.
That's when, because he's going to buckle. He's gonna fold like a $2 cheap suit, right, Dale? Is that what they say?
He's going to reiterate himself once again. And all the enthusiastic crowd that produced this reversal yesterday, which technically speaking, very, very nice reversals yesterday, right? So I do think there is a very, very decent chance that we're going to see follow through to the moves that we saw yesterday. But as I said before, I think I know when these reversals are going to be reversed. And that's when Powell is going to disappoint market participants once again.
All right, we got less than 2 minutes. Ryan, what are you looking for today?
Watch for the volatility again. These numbers could, like you said, could be a big mover. As I said yesterday before the CPI, plan your levels, 100, 150 pips either side of current market ranges, and play the edges. Try and play the edges rather than getting caught in the middle.
Look at yields, just FYI. They're peeling off pretty good. Dale, what are you thinking?
Stay with the bonds. It might be a bottom.
Stay with the bonds. All right, I'm going to put up the dollar index just really quick, just to give us a I did not want to do that. I'm trying to get us over to the 15-minute chart. There we go. And let me go ahead and readjust this. We got about you guys already know how I feel. I think you have to buy these dips. I think that the dollar is going to continue to weaken here, and I think a lot of these opportunities were just given just now.
Wait till the yen peaks, then the dollar will really accelerate.
Yeah, that's if you're banking on that, I'm not necessarily sure today is going to be the day.
No, not today.
But you know what? I'm gonna take it off the dollar index, and I'm gonna put it on the dollar yen, because this should be pretty clean from a. And notice this is the blue line that is the high from that is going to be the high from 22 years ago. And that's where we go
light district
22-year highs to like 30-year highs in dollar yen. So here's the watch the retail sales right here. It should be coming out any moment. 15-minute charts, dollar index, yields, and the S&P. Core retail sales numbers
up.
Flat on the headline number. X autos 0.1, X gas 0.3, retail control group 0.4 versus 0.3 expected.
So
take out.
Go ahead.
It's flattish. It's not doing anything much, but taking inflation into account, it's probably still in the negative.
Yeah, actually, and the month-over-month number came in, below expectations, but core's surprisingly strong, and so I have to say the consumer is doing pretty well. One of the things that when I was talking to Mark Dow, we were talking about corporate private sector balance sheets, and he was just talking about how strong those still remain, and even from a consumer standpoint too. So, but deteriorating it is, and it should continue. So, guys, I'm just gonna leave you with a couple things before Rohit comes on. Make sure that you register for our event. This is a free event, October 21st through 23rd. So make sure you check this out. Look at all the speakers that are going to be here.
7 days before.
It's only 7 days away, and then it's only like it's only like 11 days before Steve and his family travel from Greece.
Oh God!
To come visit me and my family here in the United States, which is really awesome. But look at all these great speakers that we have. Make sure that you guys, there's so many, there's something for everybody. And then look at that.
I like
look at
Saeed's
that handsome
picture.
team there. Wow, look at those guys.
How about Saeed's picture?
Yeah, Saeed. Yeah, well, he's just he goes the great unknown.
He's a hologram.
Hey, you guys are automatically registered to win one of 2 iPhone 14s that are being given away.
Rohit's
by
going to be there.
8cap, our sponsors. So you're automatically registered, and they're obviously unlocked.
Wow, you're giving away two. You're giving away 2 accounts from Trader Funding.
We are giving away 2 accounts, and guess what? We just authorized this morning a very nice 5-figure payout. So from a trader this morning. So that was really nice. That happened. Request came in overnight.
Nice.
Dude's gonna, if you're here, Mr. R, I'm not gonna give away his name, but if you're here, congratulations. Trader funding program. If you want to learn how to trade our money and not your own money, but keep 75% of the returns and not take any of the risk, and you want to access larger account sizes, check it out. This way you get into the ForexAnalytix community, and you'll end up being like, just take a look here. This is our chat room. Like if you want trade ideas and you're like, oh, I just don't even know what to buy or sell. Well, these are like us, like, oh, I'm shorting the dollar CAD. Oh, great. And then you're in the general chat room, and you can see you have all these ideas, charts, everything that people are thinking, and where we're looking at levels. It's we're not leaving you out there on your own. You get to come in our community. So check it out. Dale, TGIF, thank you for all your help this week. You're always the best, with
the hostess with the mostest.
You are the hoster, not the hostess. You're the hoster with the toaster. So
it was fun. It was wild and fun this week, Blake.
It's a great week, and thanks everybody for your support and being with us all the time. But stick around with Rohit. He's one of my more favorite tech guys to listen to, and he's going to be speaking at the event. He is right there. He is.
Yeah, Rohit's making us
joining
famous.
You right now.
Welcome back, Rohit.
Hi, Dale. Hi. Good evening.
And Blake's here. You're making us famous.
Good evening, Rohit. Good to see you. And I'm gonna turn it over to Dale.
Yeah,
Thanks,
Dale.
Blake.
You're
All
doing
right,
a
team,
bit
have a great weekend. Feel better, Stell, you and your family. Steve, have a good weekend. Ryan, nice work all week.
Cheers, Dale.
Crystallized. And Blake, you, as always, you know, great ideas every day he gives away. So, Rohit, want to share your screen so we could see what's on your radar? Pretty interesting day yesterday, huh?
Oh, very, very interesting.
Yeah. I know you're going to disappoint me and say the dollar hasn't topped yet. Correct?
That is the fight. That is the fight.
Okay. So here's some information. Rohit, one thing I admired about him was he flipped when he saw the inflation coming back to the market and risk on. So we've been talking for years, and then he flipped the other way and became bearish when his cycles and his Elliott work turned him negative. So you're not perma anything. You're flexible. You change your mind, as W.D. Gann says. If you don't learn how to change your mind, you won't have any change left. So what's on your mind going into this, scary month of October? Should we be scared or aggressive?
That's I think the most important question. And with history holds with so many big sell-offs in October. Yes. Too many people are positioned and prepared for a market decline this October.
Okay.
And probably that's the reason why it might just get pushed ahead a little bit. So I'm not writing off the end of a bear market, but what I am saying is that we have a setup that can result in a near-term rally in equities that could be pretty stimulating. So, so at least for the month of October, the worst may be done.
Yeah, I've seen some positive things about October. I've seen midterms, seasonals are positive, and end of quarter stuff coming in. That there have been turning points on, which this time frame points to. So tell us what your case is. Is it going to be some type of flat, where even though we took out that recent low, the June low, that we could recover all the way back to 4,300 SPX?
Yeah, so I'll just go through these initial slides. Actually, this is the title of the long short report I wrote, and this was at the beginning of September, when the markets were still closer to a slightly higher level, and specifically in India. So when I'm really comparing India with what is happening in the US, we've actually been a much stronger market and fighting back and rallying every time. Valuations remaining much higher than they are in the US, and which is why I actually have to talk about the FOMO even more out here than you would in the US, because moment the market rallies back, so the Nifty has been going back to 18,000, and everyone gets the fear of missing out. They start feeling that we're missing something. Looking at world markets, we should just ignore everything and stay invested in India. And so that was sort of the fight that was having at the beginning of September. And that fight is not completely gone away, even with all the fears that have come in with global selling through September and into early October. We are seeing strength, some kind of strength still, meaning that our markets are still at a much higher level than the US.
Your markets can make new highs here without the US.
Yeah, there is a chance. I'm still not betting on new all-time highs, but definitely a slightly higher high than what we've seen in the last 2 months. So that's what I'll get into. So I actually tried to explain to people that when we talk about markets, we think about greed and fear.
I like that.
Fear is actually the bigger thing that's really been our botheration, because when we say fear of missing out, it's not greed, it's also fear, the fear that you might not make money. And so this fear actually is what gets us into trouble all the time. So anyway,
fear is an acronym of false evidence appearing real.
Wow, that is nice.
You could use it. I get a buck every time you use it, though. I get a rupee. The cash.
Rupee is now at 77 rupees to the dollar. So it's going worthless.
I'm gonna have to raise my wagers with you, buddy. Okay. Anyway, yeah, I learned that a long time ago. It's not original, but I think it really, when you think about it, it is. It's false evidence appearing real. In our minds, it's real.
Okay, so two markets I'll talk about. While we'll talk about the SPX, I'll try to draw the analysis from the NASDAQ because of the much clearer wave structure. And I'm starting by looking at the monthly chart. And I'm actually trying to compare what happened on the monthly chart, say in 2000, where it was going on upwards inside a channel. And then it had this final throwover moment, which then finally popped the 2000 bubble. And then we saw the big sell-off.
Right.
And I've also plotted here is the 40-month average or 50-month average. I typically use 40, but 40-50 is a fair argument. But essentially, what I've seen is once we break that, we sort of ended that particular trend. It's sort of a confirmation. And we've had a very similar pattern from 2009 onwards, where we were not breaking the 40 or 50-month average, traveling inside this long channel. We did get a throwover in 2021, not as massive as 2020, but we have given up that. Sorry?
It hurt if you were short.
Yeah, it completely hurt if you were short.
Yeah.
But we have given that up. And so that part has popped. So have we really popped a similar bubble is the question I asked here. We have also closed last month below the 40 and 50-month average for the month of September. So that's an additional confirmation that maybe worse is lying ahead. And then we move into the wave structure to see whether that really supports these arguments or not. And so this has been my breakup of the entire structure. The fall that we've seen from the January or let's say November top, between November and January, I think all the US indices peaked. So I've marked it as a 5-wave decline in wave A into the low of June. Then we've got wave B bouncing back. And then we've started wave C down from there. The difference between NASDAQ and SPX is that, or Dow also, is that the entire leg A is actually overlapping in the Dow and the S&P, which is why I've drawn this wedging line, which essentially is what we call a leading diagonal. Right. And so if we have a leading diagonal, so I'm going to write that here. What is the significance? Now, what I have seen during bear markets in so many stocks is that when leading diagonals occur, then often wave C happens very, very fast, sometimes in 1/3 the time, and sometimes up to 2 times, 2.618 times in Fibonacci terms, the size. So that gets me to believe that we've started this, larger degree decline in the US indices from the high that we've made in September. But what we have completed here might just be wave 1 of that decline. So while we are looking at much lower levels, we're thinking, say, the NASDAQ composite here goes back to, say, 7,000, which is almost the low that we made in 2020 eventually in wave C. In the next chart, what I'm showing here is, sorry, 1 second. Yeah, is that we have completed a 5
as 100 or just
no, this is a composite. It's the composite.
Composite. Okay.
So the composite here has completed a 5-wave decline into yesterday's low, capitulating this move. And what should then result is, in the near term, a potential 61% retracement of this entire fall.
Got it.
Of course, it can end even at 38% near the wave 4 low. I was just looking at 2008 wave 2 of C, very, very simple. In fact, there's a lot of similarity in the wave structure between 2008 and what is happening right now. Wave C, or 1 of C got retraced 61% in the NASDAQ, but only 38-50% in, say, the S&P or Dow. So they were much more lethargic. The Russell was much more stronger in terms of bouncing back, even more than 60.
Why do you have a horizontal dotted line up at 15,000? Is that if the count changes and takes out the B high?
No, it's just come up. It's just the 161%. I was not really trying to say anything. It's just there.
Okay. And it would be your bull bear line? that the count changes if we take out B.
The count would change if we take out the high of B. Yes, surely that is correct, because we are if we are thinking this is 5 waves down, the violation is at the high of B.
Change of picture.
Yeah.
Okay.
So in the next few weeks,
because I mean, you're like a lot of Ellioticians. You always have you have a preferred count and you have an alternate count, right? And this is your preferred.
Yes,
correct?
That's right.
Okay. Okay. What would your alternate be?
The alternate. Okay, so that's a good question. Now, I actually have to open the chart here.
You know, blame it on my astrological sign. I'm a Gemini, so I want to. One of me wants to know the preferred, and the other one wants to know the alternate.
So the alternate would be to think that the entire move that we have seen. Let me try and take a weekly chart. Now, this is the SPX.
Yeah,
that the entire move that we have seen is actually a complex correction and not a 5 wave, and is actually looks something like this. Okay. Now this, if I take this scenario, what I'm saying here is this is W, this is X, this is Y, this is X, and this is Z. In which case we've probably seen an important bottom. Does it mean the bottom of the bear market, or it means a much larger pullback and a lot of time, before we really see another leg down?
Yeah.
So, so this would be a much more bullish count if we really take that the entire structure is a complex corrective, in which case it's actually complete.
Okay. Thank you. Appreciate it. See, so I bring in to share your ideas, but I gain so much out of being able to talk to guys like you, Rohit. Appreciate it.
So what I look out for now is at least a 50% and maybe a 61% retracement in the US indices. Specifically, I'm talking of NASDAQ going back to 11,984, and that's the NASDAQ composite. And following that, we will see 3 of C down. So that would be the next major leg.
Big wave.
Yeah, that's the big one. That's really the big one you don't want to miss if we do roll over from here, because it would be much bigger than one itself. Usually the largest leg of the bear market.
Okay, and does that kind of carry us through into early next year, time-wise?
So time has always been the tough one, but if I look at all these moves, counter trend rallies have lasted anywhere between 3-5 weeks. So the next leg down could start as early as even November, or late November, or maybe December.
Yeah. So finishes it off by the spring anyway of next year.
Now, what really supports these case of these bounces is somewhat the positioning. That is one part. So I'm just looking at the CFTC S&P futures being short. And these shorts have actually built up since, I think, May, June, when the market really started to sell off sharply for the first time. And then through the August rally, we really did not see these shorts really come off. They actually increased. Wow. And they've only come off in the last 2-3 weeks. And even then the market's fallen again. So we still have this large short positioning, which sort of creates room for these short covering rallies. So this is one data point. But when we actually look at the big picture, I've also seen entire bear markets continue with short positions remaining till the late stages of the bear market. If we actually look at, say, 2000 and 2008, in fact, the entire initial part of selling came with short positioning inside the market. So, but you can have multiple rounds of short covering when you have a big position standing out there. So this is one point which supports it. The other is purely a technical point, the number of stocks below the 50-day average. And if that's really dropped to less than 10%, so this is in percentage terms at the bottom. So that's a pretty low number. It shows that a lot of stocks have fallen together and creates a technical oversold condition. So I've just shown some history of various points at which that happened and subsequent rallies that have followed these extreme readings. Including the most recent rally from June here, which was a nice 15% rally. And we have that reading again. So that's just in
built
support
a case for a pop here.
Yes. And the amazing thing is, while all that is happening, like I said, now this is the Nifty, this is the Indian index, which has actually held up above the June lows. So till the June lows, it was making lower lows and lower highs. But from there, it's at a much higher level than the US markets. The interesting part is when I've tried to count the internals of this entire rise, I can't fit an impulse, which is why we have still put an X on top of it. And we are still thinking that it's a counter trend move and we'll eventually see a sell-off with the US indices. But right now, the short positioning, so we had a huge short position in the Indian market as well. We do get similar data like the CFTC published by the National Stock Exchange, and we call it the participant wise data. So they give you client and institutional holdings. And the institutional level shorts were at one of the highest in since 2020 out here in June. So that made a good case for this rally that occurred post-June. But the funny thing is that even now in this small little sell-off, we have a significant short positioning that has built up on the institutional side. And even more interesting, on the opposite side of this trade, you have a large long position from the opposite, which is the client side. It takes the opposite side of the trade. I'll just show a chart which really highlights this even more loudly. So these are the shorts, and simultaneously on top you see the longs, which is essentially HNIs, and we would think it's retail, but it's actually I don't consider it retail. I say that this also includes corporates, HNIs, and a lot of the smart money, and which is why every time we've seen significant long positions by the hands out here, we've actually seen market lows. And whenever we've seen shorts by the institutional hands, which may be hedging also to some extent, we've actually seen market rallies. And that's the setup we have right now, very similar to what we had in June. In fact, the client data is actually higher than what it was in June, which means even more long. And so that's pointing to me that this pop could be a little bigger than just a retracement for the Indian market. One, it has held up much more. And if US markets rally, it creates a case of not just a retracement. So initially we thought, okay, retracement 61% is 17,600. But what I'm not ruling out, and I cannot say I'm 100% sure, is a new high at least to this point. So I'm thinking in terms of an expanding pattern. I'm not saying an all-time high, which would be above 18,600, but even if we go to this top line, we would be closer to around 18,200, 18,300.
Megaphone drives people crazy because they get bullish at the top because it's a new high. Yes. And they get bearish at the lows because it's a new low. And it's just a disorderly pattern. Right? Megaphones.
Yes.
Okay.
And so the positioning, so that is why I put two alternate wave counts now here showing the entire rally is corrective. It's pulling back. Initially, it can either be an X, which means only 61%. And the alternate scenario would be that it goes into the megaphone.
Okay, got it.
And with that, I come to the dollar index, the big debate. Is it really over? And when I look at our own currency, the Indian currency, I actually don't think it's over. And if I look at the long-term breakout, I find it hard to believe that it's over already. Though we can argue now, we have seen, there are multiple sentiment extremes, and as in any bull market or bear market, all you get at once you reach an extreme has been a pullback. We've really not gotten more than a pullback. You had 92% DSI, the daily sentiment index, got a consolidation, rallies again, you get high readings, again you pull back. And this has just gone on and on and on. So where do we really call it a day? And so while we can argue that, okay, we can mark a 5 wave from the low in May, which is why some people have started to look for a top. The fact is it has so many multiple extensions that I can still keep adding 4 more waves and keep going on and on. So in extensions, we say just add 4 more waves. So you can go from 9 to 13 to 17 to 21. Till we really get a reversal. So what I would say is, why not wait for at least the 20-week average to break? Because throughout this move, we sort of held the 20-week average. We haven't really
Where's
broken.
It coming in? The 20-week.
Yeah, I'll just give you the number.
Around 110.
Yeah, it's 107.83 right now. So that gives us a lot of room.
Yeah, I would take that trade down to 107. Okay.
Yeah, if that happens, yeah. So that gives us the trigger for a relief. I think short term, the dollar should consolidate. We've seen an extreme reading. The only thing to wait for is, will it break that before calling a longer term reversal? And
well, that kind of ties in, Rohit, don't you think, with the relief rally in the market?
Yes.
The dollar pullback and maybe some type of relief on rates that, the yields come down a little bit.
Yes, that's right.
Okay.
The bond chart, though, is still not showing a perfectly completed fifth, but it is somewhere in the fifth, so it should be close to completion of this particular leg.
This is bonds right here.
No, so this is again the dollar index long-term chart, because I just wanted to highlight, given that we've broken out from such a big sideways consolidation, we can't really end it here. If I just take classical technicals, measure the size of the breakout, it points to 123, 124. So I would think that it's possibly not done here.
Yeah, not it's probably just, so everything is just we're set up for counter trend action across the board, and then sometime early December look for the trends to reassert themselves going into 2023.
Yeah,
how's that fit with what you're talking about?
Yes.
Okay, thanks for the narrative.
So I'm moving on to the Indian currency. That's the USD INR. So the rupee versus the dollar. And it's been heading higher, which means the rupee's been weakening. And it's been in a bullish trend since 2007, where it did, so we had a bull market in India 2002 to 2007, which is where the currency saw an ABC decline, where, which is USD INR saw a decline. So the currency was strong. And then since then, seen several bouts of, declines. I actually thought at one point of time when the, COVID rally, sorry for this. Yeah, when the COVID rally started, that if the dollar peaks because the dollar was falling, then we may complete a 5-wave advance, 1, 2, 3, 4, and the fifth may just complete here, and maybe would get a larger pullback. What's ended up happening during that year 2020 to 22?
Just moved sideways.
It just moved sideways and became a consolidation. Yeah. So I've eventually taken this as a running flat in wave 2. Okay. And it's kicked off a third wave. And this third wave, even if it's equal to wave 1, points to around 87. If it's extended, points to almost 96 to 97. And so that's created a lot of room for upside, apart from any short-term pullbacks. And which is why now if you've gone into 1, 2, 3 on a long term, is not going to end, at least for the Indian rupee. It's likely to get much worse before it gets better.
Okay, so let me ask you, is the weak rupee and this move that has been ongoing, that's accelerating now, a problem for the economy?
So it is definitely a problem for what we call is we have a current account deficit, which means we are net importers. So having that twin deficit, as you call it, we do have a twin deficit problem. We are net importers. We do need capital, and most of our funding is through portfolio flows into our equity market. We don't have. We've had FDI, but it's not like China. So in that sense, and we are a net importer of big time oil. So which means the number of months of the number of months of currency we hold is relevant, and therefore and with exports falling, if there's a slowdown in the economy, that affects the flows of dollars into the country. So we are seeing a net outflow, and what the RBI has done, why the currency was strong for a long period of time before weakening, is they actually put up $100 and $100 billion for sale. So we have a total reserve of around $600 billion. They just sold $100 billion over the last year to keep the currency from weakening too fast.
Okay,
but that I think is done. Sorry.
I've been, it kind of tells you, unless when one nation tries to do it on their own, for it to work, our Treasury and the Fed have to get behind a move like that to bring down currencies for Japan, except, so far the UK has stopped its slide, but yeah, need concerted intervention for the dollar to turn. And what's going to be behind the dollar turn anyway? Once we finally get to whatever the highs are. A depression? I mean, what do you think will turn the dollar, even if we go to 120? What's it going to confidence crisis, geopolitical? How about the Saudis? Since we're at kind of have a cold war with the Saudis now after the OPEC decision, tit for tat, they could not just price things in dollars, they could price their oil in yuan.
Yeah.
But I know you're a chartist, you're a technician. So, and the charts are right. You go with them. So we're right around top of the hour. Anything you want to wrap it with, Rohit?
So the last part, I think, which you mentioned, bond yields. So even our own policy from selling dollars is moved to start raising rates. And so we've stopped using, currency sales to manage the currency. We're raising rates. And which is where I think bond yields in India also go down a lot more. I'll just try to open the...
Okay, so yields are falling there and the currency is weakening while that's...
No, yields, now they have started to rise. Yields in India as well are rising. So they're not falling, but slowly, very, very slowly. I just want to open the US 10-year and then...
Bearish gold and silver, Rohit?
Yes, for the time being, yes. So this is the gold bugs index, which is the miners, already back at this trend line. In fact, if I push it up a bit, it will look broken. If I keep it to this point, then it's about to break. Not a pretty picture, because if that happens, then the marking goes to a big AVC, and that means the miners take a big hit to the downside. So wait, there is the 10-year. I did have it open. Yeah, this is the US 10-year. So, on a very, very long-term basis, we're seeing very clear impulsive declines. I've marked 1, 2, 3, 4. What I'm not sure of, do we complete 5 here and we get, some kind of a larger pullback? Or is it just going to be 1 of 5? Because in each of the early waves, this is subdivided into 1, 2, 3, 4, 5. This is also subdivided. Then why not the fifth also subdivided into 1 of 5, 2 of 5, 3, 4, 5? It's a question mark. I don't have the answer yet. But it does look like at least near term we'll complete 1 leg down, because it's a pretty long leg. And if I move to a lower time frame and look at the wave subdivisions, we can come close to an ending point, but still no confirmation that it has really reversed.
Okay. Well, I want to thank you again, and look forward to hearing from you again at the Trader Summit.
Thank you, Dale. Thanks. Thank you a lot. Thanks a lot.
Yeah, I really appreciate every time you're around. I know I could ask you anything and you'll answer it, and given me a lot of clarity today. I'm sure everyone in the community. Marius is saying thank you. Richard Adams says Ukraine peace talks could change a picture. Okay, so we'll see. But you guys should follow Rohit, at least on Twitter, at India Charts, and sign up for our summit. And I'm sure he's going to have some more material. He's going to have more time to share it. So Rohit, my trading warrior brother, thank you for all your views and your giving spirit to share it with us today.
Thanks, Dale.
Okay, everyone. So that's a wrap. You could join the team in 11 minutes on the Morning Edge remember, have a great weekend, and always don't just count your pips, count your blessings. Have a great weekend, and we'll be back here next week to lay it on the court for you guys again. Thank you, Rohit. See ya, everyone. Have a great weekend.